We've been doing this podcast for 2.5 years now, and the most listened to episodes are always the ones talking about career and certifications in Treasury. So we decided to partner up with the AFP, the Association for Financial Professionals, so we can offer you a $100 discount code on all of the AFP's products. This includes, of course, the CTP, the Certified Treasury Professional, which is hands down the most renowned and recognized certification in Treasury out there. And of course, the access to the CTP exam prep platform as well. Check the link in the description to access to those discount codes and take your career to the next level. What are the top 3 symptoms that you see in mid-market or growth stage companies before they actually rethink of their treasury stack?
When you think about treasury and finance, the first goal of finance traditionally is to make sure that the business can keep running and you're limiting any type of risk. So the first thing that you want to make sure that happens is
meet Daniel Kalish, CEO and co-founder of Nilus, the AI-powered cash management platform, reshaping how modern finance teams manage and automate their cash.
When your company grows 2 times, your treasury complexity grows 10 times. Why is that?
what happens when a company doubles the size. It usually adds multiple banks. They probably can expand in entities or territories. In general, more challenges and complexity around your liquidity setup. While, as we all know, treasury teams are lean. Normally, they don't get more headcount when this type of growth happens. Double the growth of the size, 10x more complexity for treasury with the same headcount. That's usually a mess.
In your experience, Daniel, what's the real cost of not having cash visibility?
That's a great question. I think there's unclarity in the market right now about what that means.
Daniel, you said that when your company grows 2 times, your treasury complexity grows 10 times. Why is that?
That's a big statement, but when you think about growth of a company, what happens when a company doubles the size? It usually adds multiple banks. They probably can expand in entities or territories. This results in more currencies, more ways to collect money from your customers, more ways they expect to get you disperse to vendors or payroll. And in general, more challenges and complexity around your liquidity setup. While, as we all know, treasury teams are lean and normally they don't get more headcount when this type of growth happens. So double the growth of the size, 10x more complexity for treasury with the same headcount. That's usually a mess and a big nightmare for treasury teams, which is often.
So I couldn't agree more. The funny thing is that when you grow 2x, I mean, there is really 2 ways to grow, right? There is organic growth and growing by merger and acquisitions. What's interesting is that when you grow organically, you kind of see that coming. It's still overwhelming, but you see that coming. When you grow by acquisition, it's all of a sudden that you plug in those additional bank accounts, those additional third-party vendors, those potentially another treasury team that was its additional headcounts. It's still not like the processes and the policy and everything is not perfectly embedded so that it works properly. So I think the statement made a lot of sense, and this is why I wanted to start with this.
I would just on that, I would say the complexity. So that was a really good point, but organically, the complexity, there's like some type of graph like that. But when inorganically happens, you're growing and then there's like a spike. Not only that spike happens because you're adding like 10 more banks, currencies, forecast entities, etc., but you're also expected to be hyper accurate and control from whoever is running, or usually it comes with a P that gets into the company or a new set of expectations because now we acquired this company and we need to grow more. We need to have better outcomes. So couldn't agree more. We see this often and often when there's an acquisition, this increases complexity 20x.
20x. That's 2 times 10x, but I like it. So speaking of those companies, Daniel, what are the, let's say, top 3 symptoms that you see in mid-market or growth stage companies before they actually rethink or think they need to rethink their treasury stack? What are those symptoms that you see happening to them?
So very clearly, I think when you think about treasury and finance, the first goal of finance traditionally is to make sure that the business can keep running and you're limiting any type of risk so the business can go smoothly, grow, and operate. So the first thing that you want to make sure that happens is control. And I think that the first kind of symptom is lack of control. I just don't know where my cash is. And as a result of that, I can't really figure out what I need to do next. The second symptom is, which also it's a sub-symptom of lack of control, but your team they don't have a second to do anything that is material towards getting better on your forecast, getting better in your liquidity management. They just do super technical back office work that builds your report. And I would say the third thing is, so you're basically losing on all the good stuff that can happen strategically when Treasury is running smoothly, whether it's ROI on cash or allowing you to get better towards your goals and, regain stakeholder trust, and so forth. And lastly, I would say that whenever it takes a lot of time to produce any type of reporting to your management, your close process is stuck. You can share your cash flows only 10 days after the month end. It's a big symptom of folks that are not running effectively and should probably rethink their operations. Because of the central place of Treasury actually sits in the core of finance, right? It's connected with all the different systems, ERP, CRM, equity, HRIS, AR, AP. You would find adjacent challenges that are starting to create if Treasury is not working smoothly. So, your cash reconciliation is lacking. Your collections are not really working well. And so there's a lot of other inefficiencies that are created if Treasury is not good function that works well.
I couldn't agree more, right? To start growing pains. I think the one that you mentioned here that is quite standing out for me is the effects on the team's ability to focus on the things that are going to improve the Treasury department instead of running after the day-to-day tasks that they need to perform. And I think that's a great one. And this is where, consulting systems coming, where it's like, look, you've been heading heads down for the last 6 months into your day-to-day, and you actually haven't produced anything outside of the day-to-day task, but where do you find the time to add strategic value as a corporate treasurer? So I like this point a lot.
I can add one more thing. If you're not tracking key KPIs around cash, you're probably just doing the reporting work and the day-to-day of understanding where things are. You need to track your cash buffer, your cash conversion cycles, your DSO, your DPO, FX. All those could be very clear to you, and you should try and affect those in your work and not just provide reporting on what's my cash position at the end of the month, day, etc.
Yeah. It's so funny because I've been in corporate treasury for the last 6 years now. This podcast is almost 4 years old. My God. And the number one thing I've been hearing, maybe except for the last few years with AI, but the number one thing that I've been hearing is always cash visibility, right? Cash is king. We need to know where our cash is. We need instant visibility, instant payment, instant transfer, instant. But we don't even have the data to see where our cash is. So in your experience, Daniel, what's the real cost of not having cash visibility?
Yeah. So I think we can talk about, for example, one of our clients, and we have a case study together around that. Taboola, that's a leading ad tech company, public, running billions of dollars in cash. And prior to using Nilus, they had zero visibility. They didn't have any clue of where their cash is. And as a result, obviously it's a public company. They need to be very clear around their forecast, and they need to do whatever they can do in the short term to make sure they hit the forecast proactively. And so when you don't have visibility, you can take actions that would lead you to the right place. And those actions could be push out payment to vendors, increase collections. There's a handful of things and levers that you can pull when you know where you are, plus sharing a new guidance. So that's the result of not having visibility. You just can't proactively do things that would make you perform better to the market, to your shareholders, to your management. That's, in my opinion, the strategic place where Treasury needs to act. It's not just report building. It's, hey, these are the things we need to do in order to, A, get better to our targets, and B, make most out of what we have for cash, and C, allow smooth control operation for the business.
And I like this because looping in the symptom around what people focus on their day-to-day, if they are, as you said, spending their whole time trying to figure out stuff instead of having the clear data in front of them, allowing them to make strategic decisions or guidance and reporting so that the decisions can be made faster, this is where the magic happens. Speaking of data, let's address the elephant in the room here, Daniel. We're going to talk about AI, but I want to make sure that we define terms before, because that's, in my opinion, super important. So we are on the same base to build the conversation. So what's the difference between an AI-enabled TMS, like I would say 99% of the market's TMS are claiming to be right now, and a system built from the ground up with AI? What's the difference?
That's a great question. I think there's unclarity in the market right now about what that means. By the way, not just in the Treasury market, in other software solutions, what you see in the market is that a lot of legacy players would go and say, hey, we're AI first company, but these are players that have been in the market for 30 years, started on-prem, moved to SaaS. It's extremely clunky and hard to work with. And then what they do today with AI, because that's the only option, is add a wrapper on the data, whatever exists in the system, so you can interact with it in a chat-like experience and potentially ask questions. But the problem is that many of those underlying processes are not handled correctly. And I think that data is, that's where we applied our first agent to. Data is the most, and cleanness of data, accuracy of data is the most important thing in Treasury finance above all. What other systems, legacy systems, would do is, they would try to enrich or tag your data. I would say even tag your data with usually clunky rules that are a bit high level. They're not cross-reconciling it. They're not referencing it with other. We have a data enrichment layer that can create high accuracy, precision, and clarity on your cash flows, your patterns. This helps build very accurate cash flow view, but also forecast, and allows our agents to kind of run smoothly with recommendations and suggestions as well. And so maybe going back to your question, in order to be AI native, all your sub processes should also be supported with AI and interact with each other. So a sub process is how I categorize my transactions. When I categorize with AI, whenever there's a new category or a new transaction that was defined, this would feed back into my database, my agent, and the next time this would be performing better. Okay, so that's one example. But all those underlying systems are running by AI. Also on how I'm bringing data from banks, for example, and how I validate. And then the agents, that this leads me to the next maybe point on what AI means, but agentic workflow, those agents are working together and creating a system that is larger than its subpart. I'll pause here because that's a big topic, and usually when I explain it, I actually show a diagram of what it means, which I think helps a lot. I'm happy to share it later on.
Yeah, so we can definitely put some slides and the diagram in the show notes of the episodes. So that's something I'm a bit familiar with, but obviously much less expert than you, Daniel. I like the story that you've built around most TMSs right now started on-prem, then become SaaS because it was the next big thing and that's what people wanted. And now they are becoming AI first because that's the next big thing and what people want. Whereas when you build from the ground up with AI, you have much more room for innovation and making it actually work. It's a tremendous amount of work though as well, like arriving as a new actor on the market, but that's something we're going to discuss a little bit later on. I'd say if you had to pin down one core benefit of having, and we're going to obviously talk about Nilus, but as a concept, one core benefit of going for an created from the ground up with AI TMS versus an AI-enabled TMS, what would you say is that main one biggest differentiating factor?
Very, very clear. I think that the legacy TMS, they are a system of record for cash. They help you bring cash data, record it. Sometimes they help you run payments, but that's usually a separate model. But they don't really help with decision making. 91% of the companies in the market, whether they use a TMS or not, are still running their forecasts outside on Excel, are still managing their liquidity on Excel. And so effectively you see in the market right now, every legacy systems are system of records. They can't help you with the next extra mile that you actually need to do. And then what leaves you with a lot of prep work and research and scenario planning and all the things that you are doing on Excel today. What an AI native system does is it allows you to be a system of action for cash. And that's how we refer to ourselves. The system, because it's built with agentic, it's smart enough to know what happened, what needs to happen, and what are my options that I need to explore, and give a very clear reasoning and context into why those decisions or why those options are relevant for me. So it's not just like a plug number that is there. It's, hey, this is option number one for you to take right now. And this is relevant because this and that happened. And this is safe because if you see those patterns, if you connect with your ERP, you see that these things are about to happen. So that's the biggest kind of change, in my opinion.
Yeah.
It allows you to go to the next mile and obviously do things much easily, faster onboarding, all those things. But that's the true external benefit outside of that. I want to talk about what agentic means. Agentic means a system of agents. Each agent is an expert in its field, and they can work together towards a goal. So when we think about a decision, a system of action, what Nilus does is it uses multiple agents in the background, starting from categorizing, enriching the data, moving to our AI Treasury analyst agent that allows you to get any pattern recognition on historicals, anything that relates to your actuals. Then it moves to be served by our forecast that uses those insights. And then we have our AI policy or liquidity optimization agent that monitors your cash on an ongoing basis and then provides those recommendations. And so they need to work together. And this is truly what's different than a legacy one that just gives you like a wrapper on top and then something that truly works together in tandem in real time.
I'm going to throw you a curveball, Daniel.
Yeah.
That sounds amazing. So if we manage to make this work, that's game changer. The thing that I can't help but think is that when we started talking about AI in Treasury, the core problem was the data used to like feed this AI who would then help us make that decision or even make the decision for us and be like, hey, here is the context, here is option number 1, 2, 3, here is the one I recommend, here is why. But for this, you need crystal clear, properly structured, fully enriched data. And whether you use an AI-enabled TMS or an fully built from the ground up with AI TMS, the problem stays the same. If you cannot plug in the right data, have it properly enriched and structured, the recommendation might not be the one that the treasurer need to go for. So how do you solve that?
Correct. So I think that this is, again, the most important item in our world is how we get the right data, how we set it up right, how we clean it up, and how we monitor it constantly, that the data is not stale, offline, whatever it is. At the end of the day, you need to be able to connect and monitor with a few key systems, and you need to tag it properly. You need your banks. You definitely need your ERP, which we're connected to all of our customers. This helps us, by the way, tag our transactions in a much better accuracy and have the same line of thinking between accounting and cash. So this becomes tremendously important. We need to add your Excel file, which is important, and you have some indirect methods over there. And then we potentially need to connect to other systems, AR and AP. The most important thing is to be able to get granular on the transaction level and make sure it usually aligns with your ERP. If that works, and with AI today, it works, that's what we do. Your results, your outcomes out of that are reliable and things that you can really work with. Besides that, again, going to the concept of how we build AI, we're not giving just one answer that has, not a lot of context. We allow our customers to interact with the agent and see, hey, these are 3 options for you. You still, as a treasurer, you are in the driving position. You need to take the decision. You're extremely more smart and talented than the agent. The agent needs to do the work for you of automation and provide clarity on what's happening and a few scenarios, and you take the decisions. So this allows us to, by creating a system that works like that, allows us to have a world of options and for the treasury to go and take the right decision at the right time.
That's reassuring. The treasurers are still needed. But that does make sense.
That's our take. Some companies are trying to
hopefully it's the truth.
Yeah. No, it's I think it's whenever there's talent and motivation, and we just need to make sure that as individuals we're excelling beyond the one function. For example, we need to make sure that we're not just dragging and dropping data and bringing a report, because that could be replaced by AI. When we need to affect on KPIs, and there's a lot of different factors, and we need assurance, we definitely need someone there. And I think that this would be like that for many years forward, potentially until we have AGI, and then this is...
Then it's all over, but treasury will probably not be our main problem then. I like that a lot, Daniel. So are there some examples where a tool like Nilus, right, flagged a risk or made a decision that would have otherwise been missed if it was with any other TMS or even AI-enabled TMS? Do you have examples like this?
Yeah, I think that what we're really proud of is our policy or liquidity optimization agent that basically runs on top of your data with specific guides or policy of how you want to use your cash. What is my minimum requirement for this balance, maximum, counterparty risk, any function, any KPI that you want to hold on your cash, Nilus can monitor this proactively for you. And we're, at the end, human beings. We can't really just spend the entire day into looking into like 100, 200 accounts. The system does this for you and provide those suggestions and insights in real time so you can act. So whether there's a ton of idle cash that you can move to investments, high yield accounts. You can, instead of, calling your deadline, your revolver, you're actually expected to get funding from a different entity, and you can close this gap. A missed potential forecast, but by pushing out payments, you can actually make it. All those things are very hard to calculate in real time, and the system does it for you. So we have multiple cases where this is like an extremely, and then, we get often from customers on, sometimes they call me and say, hey, like, Daniel, just so you know, this one instance that we had this month made it for the entire year for Nilus, put aside the productivity and automation. And this happens a lot.
Boom. That's the kind of feedback you want to receive from your clients. That's gold.
Yeah. And that's the system of action. Without that, you can't really be in this mode.
100%. So tell me a bit more about your differentiators, Daniel. When we see stuff on your website and your LinkedIn profile around implementation speeds, actual full visibility, all in under a week, I've done TMS implementations. This sounds like a dream. So how is that possible?
I would say, it's usually there's different parts of our implementation, but usually we get connected to all the banks and ERPs within 30 days. Under a week, you can get different items from our systems, but one of the main difference in connectivity and speed to value is that we're not necessarily bound by normal means of working with banks like SWIFT or SFTPs or APIs. We have our own agentic system to be able to retrieve data from banks in a much, much faster time. So the time to value is dramatically.
What do you mean an agentic AI connection?
So we can parse data from banks in a much faster way with our agents.
But how do you connect to them?
So I'm not going to go deeply into kind of how we do it from a tech perspective. I'd love to do it with our customers, but
Okay.
all we need is a user, and we can connect to the user to the data and bring it very fast. So the implementation becomes, a swift and not a year-long implementation. But this is usually the first phase of what we do when we work with clients. Going back to differentiation, the concept of having a system that works for you, that helps you take those decisions with our forecast, with our liquidity optimization and policy agent, those are key differentiators. Put aside that, with the system, you can get much more granular in the way you tag. You don't need to work for the system and continuously tag everything and then work with an implementer to change the structure. Everything is in your hands, very intuitive. And lastly, we also impact other adjacent processes to cash. So the cash accounting, we're connected with ERPs where we reconcile cash. We also help with the cash application process for collection. So there's other adjacent items which we support our clients with.
Fair enough. That does make sense. One of the funny things that Hussam and I keep seeing, right, throughout our corporate treasury journey is that AI is amazing, data is bad. We've already discussed that. One doesn't work with the other. So for the treasury function, which is very risk-averse by definition, right, we are the safeguarders of financial risk. We need to mitigate it, prevent it, not venture into new, risky, innovative for sure, but risky areas. So between that data enrichment, that agentic AI, all that innovation that you're bringing, how do you approach this with treasurers from a point of like, hey, here is why it's, I suspect, minimal risk for the return that you can get on this? How do you approach that?
I would say that I assume that your question is, what if it doesn't work? Like, can you elaborate a bit farther on the specific questions in terms of risk or?
Yeah, sure. So thanks for clarifying. Not necessarily that's what happens if it doesn't work, because I believe, from what I've seen and we are here, right? So I believe that this can work. My question is more around the fact that I've worked with treasurers, right? As a consultant, I've been an interim treasurer as well in a treasury department. Think top 3 company in the world. And the number one thing that a good corporate treasurer does is that it mitigates risk. It doesn't take risks. That's the whole point. When you have cash on hands, you find the safest way to get a decent return on it. But the number one rule is preservation of capital. So when we think about implementing new solutions, implementing new tech stack, implementing AI, I had one of the guests say a long time ago that Treasury will be the last ones to implement AI. Maybe at the exception of legal, because they will put so many safeguards as well.
You wanna hear, just if I can interrupt you.
Please, go ahead.
What happens today in the market is there's vertical AI software that are serving specific verticals like treasury or like finance and like legal.
Mm-hmm.
The fastest growing vertical software is a company out here in New York called Harvey, which is a legal AI, right?
Interesting.
So this is the leading AI software right now that is specifically focused on verticals. So I doubt, this saying that Treasury will be last is true. We actually see a huge amount of interest and uptick from our customers. But I understand where you're going for. You're going for how can we make sure that the data is reliable, that we're taking the right decision, and we're not risking our business because we're now using an AI solution versus our old Excel, right? That's kind of the I would say that the main thing is during the implementation process, you want to make sure that you're comparing 1-to-1 and you're not leaving your Excel until you see a consistent multiple weeks of accuracy, relevancy of data aligned with your Excel. And B, we're still not in a world where there's autonomous treasury, right? Where everything happens, you don't need to be there. That's why you as a treasurer are still there. And so you need to make sure that the data that you see in the system the recommendations you see are backed with real numbers, and you know your business, right? You know if there's a different thing that doesn't make sense, and you need to be there and to act in it the same way that you would be doing with your Excel if someone had a fat finger and typed an error or something like that. So we're just changing the context. What AI does, it helps to maybe just focus on that part instead of building the entire scenario planning and bringing the data in. You just need to monitor and make sure that things make sense, but you still need to make sure that the underlying data is right. So what I would look in an AI system is that when it provides recommendations, suggestions, you always want to make sure that the system explains why, shows you where the data is coming from, and shows you variance or stuff like that you can then very quickly drill down into and figure out if that makes sense or not. Does that answer your question?
Yeah, I think it provides a good understanding of how you make your business case, right, for Nilus, but overall for AI in Treasury. And it's all about, if I understand properly, approaching risk from we need to see the incremental innovation that we can bring whilst minimizing the risk of it, make them buy it, understand that there is value there, try it. I think the 1 week implementation cycle or the 1 week benefits that you get right after the implementation are a very good case for this. Is like, plug us in, see for yourself. If that's like, not your cup of tea, then we will discuss. But that does make sense. So let's talk money, Daniel. Let's talk ROI. What's the ROI timeline that most clients are seeing when they start working with you?
So I think ROI could be broken into 3 main elements. The first one is just productivity gains. Within 30 days, all your banks will be connected, your ERP will be connected, your data would be enriched. So all those hours spent on chasing data, tagging data, and I'll give you an interesting insight. This is from a survey we ran. 80% of the Treasury time today goes after chasing data, not improving outcomes. So that's the first thing. You would see a complete reduction of those manual repetitive tasks that you're running on your day-to-day basis. You're probably going to see also improvement in your control because the tasks are so tedious. You may be doing this once a week. Now you can do this once a day, if not multiple times a day. Then the second item is byproduct. You'll be able to be in control of your business. And the third one is dollar value, right? This is always very interesting. And from a dollar value perspective, it's usually around our liquidity optimization agent or policy agent, where Nilus can help you locate trapped cash, idle cash that you can then go and invest, decrease usage of your revolver, make sure you're using the most optimal FX conversions or hedge when you do that, because the AI can track all of those. Bank fees. So all of those different items are then calculated into a dollar value. And I could tell you that most of our clients can get upside of at least a few hundreds of thousands of dollars by just optimizing slightly their behavior around their liquidity planning and management, because we're dealing with a lot of money on the table, right? Hundreds, if not billions of dollars of cash. Every slight change can actually cause this dramatic uptick, and then Treasury becomes a hero. That's our main goal, is to make you guys heroes.
I like that. Speaking of which, anything that I didn't ask you, Daniel, that you think is important to discuss here, how to make us better heroes for the company?
Maybe the other thing is how, as treasurers, as a Treasury team, we can go above and beyond the normal kind of Treasury function. How we can, for example, part of our system, we provide AR forecast that is fine-tuned with AI. Some companies bring their collections team to then use it also for their use case. And we obviously kind of proactively try to make it happen. But there's so many more benefits that by doing what you do in a good way, you can affect others in the org and become even a more strategic power to the business. So I would say this is the main thing, is how you can work with the different teams and affect your liquidity, your cash conversion cycles, your DSO, DPO, by helping collections, by helping accounting, by helping payments, all of the above.
Daniel, I think this was an absolute masterclass. If people want to find out more about you, about Nilus, where should they go?
So I'm available over LinkedIn, Daniel Kalish from Nilus. Our website, nilus.com. So feel free to reach out. Happy to interact. That's, that's what makes me the happiest, is to speak with prospects, with customers, and just like engage with great people. So looking forward to that. And thank you, Guillaume. That was such a pleasure. And hopefully we can do another session soon. Really enjoy this one.
For sure. Would love it. Daniel, absolutely loved it. And thank you so much for coming on Corporate Treasury 101. Thank you so much.